Hello, traders. Gary Wagner here. It is approximately 12:30 p.m. Monday, the 9th day of January 2012. We are coming to you from Hawaii again. So when we look at 12 o'clock here, 12:30, it is 5:30 currently in New York City. We have a mixed metals markets this morning with gold trading lower, trading off between say $5 and $10. It was up in the overnight session, and silver up about 30 cents on the day. Interesting scenarios brewing in the market. My sentiment, my take right now is that there is absolute indecisiveness about which way to look at the current scenario in the European Union. Therefore, we have had mixed markets and mixed moves in the gold market. I want to start with our daily Henkin chart. Go ahead and blow that up for us here. And as you can see, we have had this rally ever since we saw this low down here, 1530, I believe. But we are getting our first red candle in a Henkin at 1607.86 after losing the wick or the tail on yesterday's. What that tells me is that if this wave count is correct, we're probably going to get some sort of a correction down here and then a continuation back up. For that reason, it might be best to go ahead and pull profits at least on half of our position, if not the full position that we are long at 1588. We might see this market recoup. As I said, there's absolute indecisiveness. The market could go either way in terms of what we're looking at on a fundamental basis. But when we look at the straight technicals, there can be no doubt that this trend and upside rally that we saw develop towards the end of last year, the beginning of this year, beginning of January, is running out of steam. And you can really see it quite eloquently by looking at these Henkin candles right in here. Traders, the next chart that I do want to take a look at today is silver. Silver showed a nice showing today. As I said, up around 30 cents. We are looking at a straightforward candlestick, and let me go ahead and blow that up for you. And what I am seeing is this. When I look at a classic Fibonacci retracement, what we are seeing is a range-bound marketplace right now that seems to be caught in between in terms of the straight parameters, this 61 and 76% here and 61% here. You can easily see that we have had real resistance at 29.71. When we look at this particular range of the marketplace, you can see that aside from a couple of highs here, and of course no ability to break through on this last rally at the beginning of the year as this market moved up, ran into a wall of resistance, came back down, my personal sentiment is if this market continues to trade in the way that it is, we'll probably drift back down somewhere in the area, find support roughly around 28.32. That to me seems to be the real support area. Now, when we move this into a Henkin chart, and again, this is our daily chart, so it gives us a good indication of strength of trend, you're going to see something quite interesting. Give me 1 second here, I'm sorry. And that is in a similar manner to gold, although gold was able to show a pretty resilient rally. I can't say that we saw the same for silver, but when we take a look particularly in this last rally, this is where we saw those really sizable moves. You can see that like gold, we've also had a basic change, and that change is, you can see that 3 days ago, we actually lost any kind of an absence of the lower wick. This, of course, is what we look for a continuation of an uptrend. We went to a lower wick to a doji small red candle. So we're seeing a reversal there also. That, to me, is indicative of a market that will probably trend lower. Again, as in gold, here we're in at about 28.10. So we've got some profits in there. I would recommend that you consider pulling profits in this area for those that are looking in terms of a trade on a short-term basis. Stock market, Standard & Poor's, Henkin, dailies, you're also getting a diminishing of the trend. You're noticing these wicks are starting to show up. Body size is getting smaller. It has found some real technical resistance right up around this area when we look at the tops in the area. As I say, currently trading at 1280.70, and that's on the daily S&Ps, which of course is closed for the day. The last market that I really want to look at today is going to be our dollar index. Dollar index trading lower, 81.39. When we look at it here, you can see really what would be conceived as a dark cloud cover. Once, or I should say, if you get confirmation on this, it would indicate the dollar probably softening a bit. But when we look at the daily Henkin, you can see that even with that sell-off, you have not lost the absence of a lower tail. You've got good body size in the marketplace. And this is really where you can sometimes see a real distinction between the markets itself in terms of the type. This is a continuous contract, whereas the other daily we were looking at is simply the March contract of the dollar index, a basket against 6 different currencies. So once again, as I said, I'm seeing some weakness in the market. It might be most prudent to go ahead and pull profits in this area, see if this market is in fact going to dip, and then look to act and position ourselves from there. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.